Hello everyone, welcome to another live analysis. Distributed in all our social media, in GoToWebinar as well, so people can register and attend into our GoToWebinar session as well. So welcome, this is a live analysis. I'm gonna go through today whatever you want me to go through. This is your session, this is your time, you can ask anything you want. I'm gonna start by analyzing first of all, the fundamentals, what is actually affecting the market right now, seeing some trends, seeing the momentum in the majors indices. And as you can see, I have put cable on as in order to start with cable. So let me just share my screen as well into the social media channels as well. Here we are, perfect. So Tim, whatever you need, please stick it in the question box or in the comment section, okay? And I will be able to see your comments and I will be able to reply and to analyze with you what you need. So Mohammed, welcome Mohammed. You're the very first person over here asking about something and you're asking about gold. Okay, so why not? We could start with gold, even though I wanted to see some technicals with you, with some of the news about UK economy, etc. But yeah, since you asked for it, you're gonna get it. Let's start with gold, guys. For those that have attended through the GoToWebinar session, please stick on the question box any asset that you want me to cover. Okay, so okay, go. Let's start with gold, as Mohammed asked. So, okay, I'm going to start with the daily picture there, Mohammed. And let me share your comments so people can see it as well. So here is our gold in a daily basis firstly. And the reason why I'm putting the daily chart on it because I want to clearly show you that there is a downtrend and down channel. Okay, and to be more precise, it should be somewhere like here. So you see, retested once, retested twice, retested 3 times, retested yesterday as well. Let me zoom in. Retested, on Monday as well. Over here at the top, it was it started at the beginning of August, retested in September as well. So this is a nice downwards channel. As you can use your regression channel available in your platform to plot and be able to see this channel in which we are seeing gold moving. And as you can see in my chart over here, the asset gold continues to post some lower highs and lower lows. So since August, any rebound, it looks to be temporary, it looks to be a correction, and that's quite reasonable, to be honest, if we consider the fundamentals. The increase of rate hikes and the prospect of further increase of rate hikes is inversely correlated with gold. So for the time being, you can see that is holding at 1620 territory. Momentum is aggressively down. You can see that its magnitude over here is keep sloping lower and lower and lower away from zero. RSI at 30. Further space to the downside, further area until it's oversold. Sorry, that's RSI. Stochastic also below in the oversold territory, but it didn't confirm any indication of a rebound yet. So remains under pressure. Any bounce looks to be limited as both the technicals and fundamentals support further drift for gold. You can see that Bollinger's are pointing lower. It's in a channel. As long as it doesn't exit the channel, any correction could be just a correction. Now, so further decline, I will put the monthly chart on just to be easier for us to identify next support and resistance level. So the next support level is coming back to 2019. And you see that, guys. This is a monthly chart, or I could use the weekly chart as well. So it's coming back to 15,000. So let me be precise. let me be precise. So this latest up a fractal high, its latest fractal high was at 1556. So that's the next floor for gold if it breaks this week's low, okay, at 16,1400s. 1614, sorry, territory. So the next floor could be seen back to 2019, that latest up fractal, and the 50,056. So if I also use, so let me just be precise, I'm going to use my Fibonacci extension as well. It will help us to identify support and resistance levels. So you can see that the 61.8 Fibonacci extension was already broken. The asset now is ready to break the 100 exponential, the 100 Fibonacci extension. So the very next one is way lower at the 1486 territory. So three support levels for the long term. Okay, 1600, you can say, round up. 1600, if that breaks, the floor opens for the 2019 highs, and if that breaks as well, then that's a free fall. That could be a free fall to 161 Fibonacci extension. Now, I need to go through the intraday analysis, right? It was all about we covered the long term and medium term, but let's see what's going on today. So apparently we have a bounce over here, my dear Muhammad. We had a bounce just an hour, less than an hour ago, a bounce of gold, okay, and currently retesting the 50 period moving average. This is the 50 period moving average in the 1 hour chart. Okay, so what we're having over here is also a clash of my fast moving averages, but it's not a confirmation that it will continue upwards because they have clashed. They haven't posted a bullish cross, dear Muhammad, over here. MACD is still negative. RSI it rose, but it didn't manage to keep rising higher above 50. You can see that it already did a bit of a pullback. Stochastic, still the only one that is still positive is stochastic. Stochastic still points to the upside. However, the 50 period moving average, this blue line, the 50 period moving average over here, it has been retested several times this week. It had been retested on Monday, it had been retested on yesterday, and it is retested right now. But the whole week, gold failed to break our 50 period moving average in this 1 hour chart. So this is the level to be watched. Only break of the 50 period moving average and a closure above it, okay, not a retest like this one, not the tail. You need to see an hourly candle extending higher and closing above 50 period moving average. So something like that, a closure above the 50 period moving average, which stands at 1631.80 right now. So closure above at the top of an hourly candle to be closed above that level, it could suggest a potential retest of our midline, the midline area, the midline of our channel, and the 1650 territory. So here is the next level to be seen if gold managed within the day to extend gains and to decisively close above the blue line, above the 50 period moving average in this 1 hour chart. However, momentum implies a very mixed picture, as you can see. As I said, the only thing that is positive over here is stochastic. all the rest of our indicators are in a negative bias. RSI at 49, you see, it's pointing lower. MACD still negative. Fast moving averages have clashed, but they haven't bullishly crossed yet, so they haven't confirmed the continuation of this rebound. So this looks to be just a limited correction before the asset eventually turns on the overall direction. So immediate resistance level 1632, 1645 for 46, and 1650. Okay, so this area could be tested only if we have a decisive break above the 1632 territory, so the 50-period moving average. If I connect the peaks, yeah, no, yeah, that looks limited. So let's move on. Hello, Rose. Hello, Naomi. Are you using default parameters? So Naomi, okay, this is a bit messy. Okay, so I'm gonna clear all this mess. For my intraday setup, I use a 5 and 9 exponential moving averages, 50 and 200 exponential as well. My Bollingers, MACD, RSI, and stochastic 533. So the only thing that is not the default one is my stochastic, which is 533 because I use it for 30 minutes charts and 1 minute chart. Okay, the rest are the default ones, except the moving averages, which is a 9 exponential and 5 exponential. Okay, that's the intraday setup. For the daily chart, where's my daily chart? Sorry. Oh, there it is. Again, everything is default over here. Bollinger default, MACD default, RSI default, and the 250 simple moving average. So Joseph, I was looking the daily in the beginning. So we said that the daily in gold remains in a downwards channel since August, and a very, very aggressive negative momentum continues, as you can see from the MACD over here. So the next support levels, as we said earlier, for the daily chart are down to, let me just do very, very briefly what we did earlier. So we use the Fibonacci extensions to find support levels. So 1600 and 1550, 556. This one, this support level, is also the 200. Okay, so not the two. Sorry, it's also back to 2019 latest up fractal. Not sure whether you can see that. So yeah, so these are the next support levels for gold if it managed to break this week's bottom and eventually the 1600s territory. Okay, and as it has proven, any correction so far, it was just a correction. Any rebound, it was just a correction of this long downtrend that is holding since the beginning of August. Can you do one analysis in synthetic indices? Yes, okay. So, it's also the questions in Facebook and YouTube. By saying synthetic indices, I guess you're referring to VIX, dear. Was great, dear Joseph. I think you're referring to VIX, volatility index. Okay, so let's do VIX. Why not? Did I miss the question or something? So, about yes, I did. Okay. Emeka asked earlier for Aussie, and I didn't reply to him. So Since we have covered gold and since they are very correlated with Aussie, let me do Aussie as well before we move on to the VIX, dear Joseph. So, hello. Can you please analyze, guys? I'm not sure you just joined. I did analyze gold and okay, pound yen. Okay, let me pound yen. Supply and demand with supply and demand controls. Okay, I'm on it. Okay, give me time to analyze Aussie and VIX first. So first come, first served. Aussie in a big drift, 4 consecutive days. This is the daily chart. Okay, let's put the appropriate template as well. So this is the daily chart there. So 1, 2, 3, 4 days in a row to the downside. What was significant with Aussie? It was last week. Last week, it did manage to break. Let me zoom out because I want to show you. Have you seen that 1660 territory? That was a support that was held for the last 2 years. Okay. Not sure whether you can. I'm gonna put the weekly chart just to see it. That was a nice floor held for Aussie since March 2020, and last week the asset broke it aggressively. And if you had a closer look, it looks like a bit of a head and shoulders as well. So that's a very strong bearish pattern. And also the fact that the decisive close, even if we miss this pattern, even if this is not a precise head and shoulder, the fact that it broke last week and closed the week below 6660 territory, which was a floor held for 2 years. Okay, it what has from a technical perspective, what has signaled the beginning of further fall for Aussie. You can see that this week negative bias continues to the downside. So currently the asset is below not 64 territory and extends even lower. MACD over here is down, increasingly down. RSI, you see that RSI is pointing downwards as well. So all the technicals plus what I'm just discovered, a bearish cross of 50 and 200 week moving average, add to the fact that Aussie is in a bear market, a medium and long-term bear market. So the fact that it keeps declining suggests that it could retest 2020 lows. So the very next support level is on this two. It's over here in 6250. The very next one, somewhere here, 16, not 60 territory. You check your candles, your historic data. It's a very significant number because it's a round, triple round number. But other than that, you can always use your indicators, okay? Don't be afraid to use your indicators. I'm still in the daily chart, in the weekly chart, guys, just because I want to plot. Okay, so where is next? So Fibonacci extension over here, give us another possible support level at 61.10 territory, okay? So that's the support, the next support levels. I'm gonna get rid of that because it's already broken. So the next area to be seen is 6250 as negative bias increases in the medium term for Aussie. Let's move on to the daily chart. You can see in a sell-off continues, is oversold already. So we might see some consolidation before because it needs to enter back to the Bollingers. Right now it's outside. So this is an extreme condition. In every extreme condition, it needs to stabilize a bit. It needs to get back to where it was. So if I just So 1, 2, 3, 4 days outside Bollingers, but it's so we might eventually see some kind of a consolidation, but yeah, nothing is implying to any correction, any rebound for Aussie in the medium and long term yet. So let's flip to the 1 hour chart, intraday setup right now. So let me set my intraday setup. Here we are. So that's the 1 hour chart. Zoom out a bit. Perfect. I'm going to use my Fibonacci levels once again. There we go. Down, 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 down. Found the floor at 63.50 territory. Rebounded earlier, retested the 50% retracement level, so it came back to the area that it was in the Asia session, but quickly turns back down again, as you can see. So what we are getting from the 1 hour chart is a very neutral to negative outlook. Why is that? Neutral because our fast moving average are pointing to the right hand side, which suggests consolidation. So RSI the same. RSI tried to move above 50, didn't manage, and is turning back down again. Stochastic just posted a bearish cross, suggesting that it could turn back down again. MACD is negative, so this picture from technical perspective suggests that this bounce was limited. Okay, it already ran out of steam. So the next immediate support level is at the day's bottom in the 63.60 territory. Okay, so and that's pretty much this is in line with what's going on in the markets right now, guys, because dollar remains on beat. It might be a bit sideways this morning, okay, ups and downs, a lot of volatility, a lot of indecision, risk on, risk off all the time today. So if we zoom in on today's performance, you can see that it was up and down, up and down, up and down. A big sell off over here, but quickly to. But regardless of what we are seeing today, dollar, no matter what is holding gains. Okay, so if I put the daily chart, you can see that it sustained the 114 territory. Even though it's sideways today, it sustains gains. So remains the biggest gainer against all the other crosses. And we can see that in this limited bounce on the other crosses. So hopefully I help you with that, Emeka. Let's get to VIX. It was a question from Joseph. VIX, volatility index, fear index, otherwise we call it fear index as well. So it's in an upwards trajectory, sorry. Excuse me. So it's in an upwards trajectory, posting higher highs and higher lows since yesterday. This is the intraday setup. MACD slowly rising. Can you see that it's rising? RSI holding above 50 and is pointing that there is still some. Excuse me. It's holding above 50. You see, it's steady a bit over here, but it's still holding move above 50. Stochastic, however, is turning negative, it's turning down. So, okay, but we need to see a break of our trend line over here, or at least the 50 period moving average, in order to suggest that it could get back down to the week's low territory, because for the time being, this looks just a correction. So if I put that on, latest bounce, so get back to 61.8. So under pressure. So a break, ladies and gentlemen, a break of the 20 period moving average or this trend line that I put by connecting my lows over here, my fractals. Sorry, let me be precise. Oh, that's already broken. So if I connect, sorry, just give me a second to get rid of this. I want to get rid of this rectangle. Yes, by connecting the tails. Okay, I've seen that this is already broken, but I need to wait another 30 minutes until this candle is closed in order to suggest that to confirm whether the selling pressure will continue or not. If at the top of the hour it closed below my trend line or below the 20 period moving average, then the next support level for VIX is the 30.77 territory. So it coincides with the 50 period moving average and the latest down fractal over here. Can you see that, guys? So if that breaks as well, then the next floor is at yesterday's lows in the 29.75 territory. That's for VIX intraday. Yeah. Resistance holds at the top of the day in the 32.60 territory. That was VIX. So let's move on. Dollar CAD by Alim. Yeah, Emeka, hopefully you were here when I was analyzing Aussie. So, dollar CAD, sure. Look at this beauty. Look at this beauty. This is the daily chart. Hopefully you're checking your trends before you take any decision, the overall trends, because there are a lot of trends out there. A lot of trends, clear trends. Look at that. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bullish candles and just 2 indecision days out of 12. A very sharp rally, aggressive rally for dollar CAD as dollar is on bid and Canadian dollar is under pressure, affected also by oil prices and the fact that oil prices have been the backs have been downwards in the last 2 months. Sorry. So dollar CAD is at, I'll put the weekly chart, is back to 2020, April, May 2020 territory. Okay, so reverted more than 60%, 70%, was it? Yeah, more than 60%, nearly 70% of the drift that we've seen since 2020 up to 2021. Reverted 70% of it. So, so further, if it further advance and tension in the long term is to 140, 141 territory. But that's a long story. So let's see where we are standing right now, first of all. So I'm going to put the intraday setup. So let's see. Okay, so here we are. Okay, perfect. Sorry. Okay, so can you see that? Up, well supported by the 50 period moving average. You see, at the 50 period moving average tends to support quite well dollar CAD in the 1 hour chart. So it continued to the upside this week as well. A bit of a correction the last hour, but it held above the 20 period moving average, and that's our something that suggests that bulls are still in control. If you emphasize on the body of the candle, this candle over here, indeed it was a strong bearish candle with a long tail downwards, but bulls managed to push the price higher and to close the session above the 20 period moving average with the body and the tail equal. So there was a big fight between bulls and bears. So, but what is important is that can you see this is a repeated floor? 1, 2, 3, 4, 5, 6, 7 sessions. For 7 sessions in a row, dollar cat was holding the 135, 755, 37.55 as a nice support level. Bears sellers tried to break that level, they didn't manage, and now and now it seems that they failed to extend lower. So this is a nice level to be watched because a break and a closure of an hourly candle. You need to wait for the candles to close, guys, before you decide for before taking any decision. So this is quite important because the fact that we don't have a candle closing below this level suggests that dollar cat remains on an upwards trajectory. MACD is still positive, clashes with the signal line, but still positive. RSI is still above 55, actually 56, and rising. Okay, can you see that? The only thing that is it was down, it was stochastic, but still the slope is not aggressive. So it looks like there is some pressure, but not significant one. So if you check the slope of the stochastic, is very narrow. So if I put the 30 minutes candle, this is a 30 minutes chart. So down, down, quickly up, up, and what's going on right now? Let me just check a bit. Already back to the 50 period moving average and consolidating. If I'm not mistaken, this afternoon we have the oil inventories, and yeah, I think we have that. Check. Yeah, we do. So we have the oil inventories. So there might be something to be closely watched from you guys later on. But this sharp sell-off, the short-lived sell-off looks limited. You can see, as I already told you, you need to pay attention to the moving average, to the 50-day moving average, 50-period moving average intraday. It looks to support very, very well the dollar cat, and that was a short-lived sell-off. That has to do with the risk trades, has to do with the ups and downs of the dollar. It has to do with the risk aversion, which is back, and bonds and stocks are under pressure. There are a lot of things going on, but no matter what, the momentum is still positive in this intraday dollar cat asset. Sorry. So 137.55, the immediate support. A break of it could retest the 50-period moving average at 37 territory. To the upside, that latest high at 38.31 is our immediate resistance level, and a break of it could turn attention to 39.30 territory. Okay, so Alem is saying clients are 90% sell position in dollar CAD. Where are you seeing this? I don't see something like that, to be honest. I can see that there was a quick reversal and momentum is positive. Not sure. In which time frame did you see that? If it was 5 minutes chart or 15 minutes chart, okay, that was the case 30 minutes ago, an hour ago. I don't think that's the case anymore. Trade I don't know where you've seen that, or what time frame you have seen that, or whether it was in a daily, or I don't know what was it really. But first of all, By the way, was it dollar cat or cat dollar? Alem, be careful. Was it dollar cat or cat dollar? Let me check. Okay, let me check. Let me check what you're seeing. You're in the. Are you referring to the traders board? Traders board. Okay, here is traders board. Let me share it with you as well. Here it is. This is what Alim is referring to. But as I can see, dollar 39. No, here it is. So yeah, dollar cat. So that's this is what you're referring to. Yes, okay. This is what this is. This is what the most of our clients are doing, but I don't know how often this is updated. You're right. This is shows that clients' current position is 92% sell-off, but this is what other people are doing. You need to trade what you see, not what others are doing. This is just where what our clients are doing right now. And also don't forget that this shouldn't affect your trading significantly, because this is, if I'm not mistaken, for the day. Okay, so if you're a 30 minutes trader or a I don't know, 15 minutes trader, a 5 minutes trader, things are completely different, dear Ali. You're right. It says 92% are selling from our clients. Our clients. So if we have, let's say, as a company, 100 clients, okay? 100 clients. Our 100 clients, they don't affect the whole market globally, okay? Don't forget that what you see over here is what is happening all over the world right now. So what our clients are doing, or your colleague in HFM is doing, or whatever, shouldn't really. This is just for your own information. That's why we clarify that this is clients' positions. But don't forget that clients' positions don't affect the whole market. Have this in mind. It would be more useful for you to see our trader sports and not the client's positions over here. This is useful because this is taken from, and that represents the overall sentiment that there is out there in the world, not solely for the clients of HFM. Am I clear, dear Ali? Do you understand what I'm trying to say? How the traders. Yes, okay. So it's good that you pointed out right now, because I want you to use this just for your own information. I don't want you to be affected in your trading by the client's position. If you want to see the overall sentiment for all over the world out there, I mean globally, it's better to emphasize over here to the traders board. And you can see from the data, this traders board, guys, over here, it is updated every 1 minute, every 60 seconds. So this is more reliable. And this has to do with the overall, with the globe. Okay, so you see, one of the biggest losers right now is pound against dollar, against euro, against Aussie, yen, kiwi. So one of the biggest losers is pound. Against one of the biggest gainers is being Swiss, and dollar against pound. But Swiss is gaining against all their currencies. So this is what you should watch. Okay, and also your candles, what your candles are telling you in the particular time frame that you are trading. Check your indicators, check trade what you see. Okay, what you see in your charts. Write down your comments. So we have analyzed dollar CAD. Let's move on to Gubi. Gubi, one of the most volatile assets that there are out there. Gubi. I love Gubi. It's a nice, funny. Oh, and as we said, that pound is one of the biggest losers. This is the hourly chart for Gubi, for pound yen. Like Arthur asked for it ages ago. Sorry. Big sell-off. Okay, we knew that pound is under pressure since yesterday. Lots going on in UK. The government, with its mini budget, is causing a lot of fear. IMF, the international, IMF yesterday criticized the plans the government is having, and they said that they could cause a very unstable economy. Moody's also was against what the UK government is planning to do. The Bank of England also said that they will act aggressively in order to try and stabilize what the government to stabilize the whole situation. So pound, US bonds, UK bonds, UK bonds and pound are in a continuous sell-off since the new government elected. And you can see that it's been to the downside for 13 days in a row. Yesterday stabilized a bit, but sell-off continued today as well. So currently, Gubi is at 152.50 territory. That's the low of the day. Okay. The next floor is Monday's bottom at 144.85. So it has retested once, this floor, and it could retest it once again, because fundamentals do not support any reversal for pound. So pound remains one of the biggest losers of the month, of the week as well. And on the prospect that on this all this turmoil around the government's announcement of tax cuts is adding further to the further pressure to the pound. The Bank of England could stabilize a bit. This could provide some floor to the pound, but the next meeting is on November 3rd. So we have still a month until then, a full month until then. So, okay, I'm going to turn to the 1 hour chart. Let's do that. So, what happened over here? So, what happened over here is that the Bank of England had an announcement, okay, just to brief you a bit, an announcement, and that is what's responsible for this big tail up and then the extension lower to 152.50 territory. So this sell-off of pound against yen, against dollar, against euro is due to an announcement that Bank of England has made earlier. I think it was an hour and a half ago, maybe more. So actually, the Bank of England announced the bank that they are thinking other than the fact that they will proceed with aggressive tightness in their next meeting, they actually they are thinking to how can I say that, interfere based on reaction to government's policy and not let me just find the exact announcement just to. Yeah, they announced that they are thinking to intervene in the market. So in order to balance a bit what's going on around the bond market and the government bond market right now. So there are a lot of worries, a lot of concerns with this implosion of UK gilts. UK gilts, the 10-year gilt, for example, spiked yesterday by 26% higher. It spiked to 14 years highs. So in a latest announcement, Bank of England uh, um, said that they will step in order to try and calm down a bit the markets. Okay, so they said that they will keep going until mid of October. Okay, um, uh, and they are planning to provide to proceed with a quantitative tightening. But yeah, going back to our action to buying bonds, I'm not sure whether this is a good idea for and it could help the UK economy. But yeah, this is what they announced, and this is what is responsible for this big doji candle over here and the sell-off that we are seeing right now in the last hour. I'm not sure whether I could find somewhere there precise words. Is it out there? Have they provided a statement or something? Yeah, found it. So, said that they are forced to stabilize bond markets with gilts purchase program. So, uh, bond buying is one mechanism that the central banks have for supporting the economy. But that's something that they were following last year and during the pandemic years. Now, so it's a, how can I say it? It's some so this is a way to start helping with money in to the market, but this is not ideal mechanism right now when we have such a big sell-off in pounds, such a big spike in yields, such a high inflation. So the fact that they have announced something like that, a gilt purchase program right now, is adding further fear to the market, further fear for the UK economy. So whether this is there are also some rumors out there that they are responsible for this sell-off. There are rumors that the Bank of England could abandon the start of the quantitative program, and that is also adding to the pressure. But yes, they have definitely confirmed the postpone of the asset sales until October 31st, and this is what was responsible for this drift, this refresh, this renewed selling pressure that we are seeing right now over here. Okay, so Bank of England has postponed the start of the asset sales until October 31st. They announced that they will temporarily purchase long-dated UK government bonds starting by today, and this announcement had this result: sell-off, new sell-off in pound, new sell-off in UK bonds and stocks, and the UK gilts to corrected to 4.09%. So bonds will be affected from this announcement. Bonds will be affected because they refer to purchases in the long-dated UK government bonds. So this will help the bonds. But whether they will be just in the near term or not, who knows? We're gonna go wait and see. So yeah, definitely the sterling traders didn't like that. So 152.50, the low of the day. You can see fast moving average are pointing to the downside. MACD is negative over here. Can you see that? RSI also pointing lower. There is further steam to the downside. Stochastic down as well. You see that, guys? Stochastic down, MACD down, RSI down, bearish cross of the fast moving average, and they are both pointing downwards. So 150 to 50 is our immediate support level. A break of that could brings Guppy back down to 150, 150, or even 148.85, which was the low that we've seen last week. You're mistaken, dear Hakim. I'm here for everyone, either if you're a client or if you're not. This is for free. It doesn't matter whether you are a client of ours or not. I'm here to help, so you can ask anything you need, and you are asking anything. Yeah, he is indeed a gem. I agree with you, Khan. I agree with you. I'm not sure that he's watching right now, so yeah, guys, anything for Guppy. So momentum intraday is negative. There is suggests that technical suggests that there is further steam to the downside. So okay, so 150 to 50 holds as our next support level. If that breaks 152 round number, if that breaks, we have 151 and so on and so forth. So round numbers until which if it breaks these areas, it could go as down as the last week's bottom. So, and I will shift you quickly to the daily chart, because can you see that yesterday's session looks to be just a bit of a correction to get back into the Bollingers after this sharp sell-off that has been seen for the last 2 weeks. But momentum is really very, very negatively configured. So the outlook for Guppy, the outlook for pound in general remains negative. Okay, we might have some consolidation, some correction, but the outlook remains negative for Guppy. Okay. I don't see any further questions. So I'm here to analyze anything you need. So let me. So you ask for smart money, the account. Oof, that's a very big topic. Not sure how whether I should be able to cover it today, but I'm not sure whether you're familiar with smart money. Smart money is the capital that is controlled by institutional investors. So that's a very different thing that what we are currently doing. But if the big players, millionaires, and etc., they give their capital to big institutional investors, hedge funds, banks, market makers, pension funds, to invest their money. This is what we call smart money. So I cannot really say my thoughts around this area right now over here out public, but yeah, it's for people that they have a big capital to invest. And they use these big institutional investors to invest them on their behalf. Okay, so it's a large scale of investment placed by, as I said, by market movers, central bankers, funds, financial professionals, institutional players, and etc. Yes, the Dow Jones and gold once again. Dow Jones and gold once again. Guys, stocks is in a bear market. Okay, global stocks is in a bear market. Look at this. This is Dow since beginning of August. So a full reversal, broken the support of the year and extend even lower, a very sharp sell-off. These are moves that we keep seeing every recession. Even though the US economy is in a technical recession and not a normal recession, the higher interest rates, the policy tightening, what else? This has inverse correlation with stocks. The higher the rates, the lower the stocks. And plus, except from that, don't forget that the higher the rates, it means that the companies, the big companies, not Dow Jones over here, okay? Basically, it's an index it has 30 components, 30 companies as its components. So its price is derived by its components. Apple, Amazon, all the 30 components that compose Dow Jones. So in a period which we've seen global central banks increasing rates, that has a negative impact on those big companies, because it means expensive, more expenses for them. Okay, more expensive sources, less demand from consumers. Okay, so this is how it goes. Do you get me? So Dow Jones over here, 2,950 currently. I need to put the weekly chart on in order to be able to find the next support level. But look at that. It broke not only 2-year support, but also a resistance that turned, a resistance back in 2019 that turned into support. And it has already broken and extending lower. So the next support level goes down to the latest fractal, 12,630. This is in the long term, okay? I mean a weekly chart, don't forget that. I'm gonna go, so another support level could be using Fibonacci is the 28,000 territory. So in the medium term, this is the very next support level for Dow Jones. So 28,000 to 27,600. You set 4-hour chart, my mistake. So let's go down to the 4-hour chart. Let's see where we're standing right now. So okay, that's interesting. So let me zoom in a bit. It was in the Asias, actually not since Friday. It was consolidating a bit within the 29,000 territory. It broke that earlier. It broke that yesterday morning with this big bearish candle. Can you see that? Big bearish candle over here. So breaking this range. And since then, it's consolidating into a new range between 28,868 and 29,294. So now it's in a new range over here. So what we're having currently in a 4-hour chart is consolidating, my dear Dom. Okay, if we get a close below this territory, so below this level, if we have a 4-hour candle closing below that, that could open the doors to what I said earlier, to 28,000 territory. Okay, I'm gonna put my indicators in as well, and let's see where we're standing. 4-hour chart, MACD still negative, RSI below 50 points upside, but very, very weak slope, It hasn't managed to turn above 50 since the 13th of September. So the last 2 weeks it held below 50. So that implies that any short-term correction that we saw in Dow Jones was limited. So it was just a new lower high. So Dow, like all the US indices, remain under pressure. Is this clear, my dear Dawn? Is it okay? Are you still here? Gold. Let me get back to gold. Ooh, I have a lot of questions in there. Lemis asking about oil. Yeah, Steve. Steve, sorry, I missed your questions. Steve is saying, did the announcement also affect euro dollar? They said they will purchase long-term bonds. Did the announcement also affect? Yes, it affected everything actually. Okay, as long as dollar, guys. I want you to focus on me. Okay, it was an announcement from Bank of England, right? Yes, I agree that supposedly could affect only pound, but that's not the case anymore because markets is all about sentiment, right? So this announcement add further boost to the dollar because dollar acts as a safe haven as well. So when we have a lot of uncertainty with the crisis, with Ukraine and Russia war, with the leaks in the Baltic Sea, tension, global central banks are in a coordinated credit tightness, etc. We have a lot of things going on around. So when all this happens, dollar acts as a safe haven. So what we see in dollar right now is not only because of the Fed. This rally that we keep seeing for more than a year now is not only about the Fed. It's also the fact that it's reacting as a safe haven. So people turning their money to the safety of dollar. So this is what also affects the Steve euro dollar. It wasn't only the announcement of Bank of England, but it's also the fear. So it's the strength of the dollar. Okay. Shinu is asking about my moving average. Intraday, my moving average is 5 and 9 exponential moving average for a 30 minutes chart or 1 hour chart, while on the daily time frame, I'm using solely 50 and 200 moving average, okay? So US oil. Steve, are you okay with that? Okay. So oil, I'm confused a bit. Before oil, I was ready to analyze what? I'm a bit confused. Gold, yes, because Don asked for gold in a 4-hour chart. So reminder, we have put this plot on, this down channel earlier in gold, just to show you that it's been to the downside with a lot of selling pressure in the medium term since August, and that hasn't really changed yet. It's in a downwards pressure with very negative outlook. Let's move on to the 4-hour chart. So a new low for the day, another new low for the day at 14 territory. A bit of a bounce the last 3 hours, but can you see that, Tim? Remains below its 20 period moving average, below the midline of our channel, this green line over here. Let me get rid of the Fibonacci extension. This line is the midline of our channel, the midline. So below the 20, below the 50 period moving average, below in the lower territory of our channel, with MACD very, very negatively configured. RSI points upwards, but it failed to move above 50 for 2 weeks now. So this looks to be just a limited bounce, a lower high, a correction. End of story. There is nothing really to support that is changing, okay? If I put the 1-hour chart, we might see it already limited. this is the 1 hour chart. You see, it bounced, then a negative candle follow. Now it's a positive one, but it's still failing to extend and to break this 50 period moving average. So yeah, gold, that it was a bit supported by the Bank of England announcement, okay, but that looks to be temporary. Gold and silver got a boost from the Bank of England announcement that they will temporarily restart the purchases of long-dated yields, but that was just on the wake of the announcement. Can you see that? It was just on the wake of the announcement. We need to see the candle closing above this 50 period moving average, and if it does that, then the next resistance area is at yesterday's peaks and the 1642 territory. But whatever happens, my dear Don, intraday, it doesn't change this downwards pressure on gold that is going on for nearly for 2 months now. Okay, so intraday, a bit of a correction, but a weak one. So you might try to hold some gains, but yeah, that looks already that is running out of steam. Let me check. Let me put the intraday setup as well. Yeah. 50 period moving average holds as a key resistance area. If that breaks, it could retest the 1642 territory, but yeah, that doesn't change the fact that this looks to be just a correction. Okay, it's a correction. It's a limited bounce. So keep an eye on these two resistance levels. Is it clear, Diandon? Yes. Please zoom to image. Yeah, intraday resistance 1632. If that breaks, it could retest yesterday's peak at 1642. However, overall outlook remains in a strong down channel. Okay, so yes. Okay, wait. So in 44 minutes we have, sorry, in 2 hours from now we have Mr. Powell speaking. We have pending home sales from US, and we have Mr. Bauman later on, and tonight ECB Elderson. So Powell, Kofawarala is asking whether we should wait for for any high impact events today. In 2 hours from now, we have Mr. Powell speaking. He's definitely market's definitely waiting for his speech, definitely wait to see what he has to say. It's a high impact event. So whether you're a trader that likes to trade the news or not, that's up to you. But have in mind that if you want to trade the news, you need to do an appropriate risk management, because during high impact news, there is a lot of volatility that could easily kick your stop out. Okay, so however, what we say is that wait for the data to come out, wait for the markets to calm down before take any decision. But this is up on you. This is up on what kind of trader you are, what kind of strategy you have, what kind of time frame you're trading. So I cannot really advise what you should do. It depends on what kind of trader you are. Okay, I'm not sure whether I'm helping with this comment, but what else? Guys, any further questions before I call it a day? You're still here. Good afternoon. thank God the video will stay in social media. So for those that they haven't seen the full analysis, you can just drag and drop to go back and forth to find the assets that you were interested in. Oil, yes, last but not least, oil. Okay, oil. Interestingly, I had these lines. Can you see these lines, guys? That I put it this morning. These yellow lines. So it was like a triangle, isn't it? It was a triangle. I connected yes this week's highs and I connected this week's lows as well, and it looked like a triangle, and it broken 2 hours ago. So there is some positive bias going on intraday currently. So you see, it's outside my descent, my triangle. So that brings into attention yesterday's peak at 79.27 and Monday's peak at 80 territory. So we have some intraday positive bias in oil today. Fast moving average are pointing upwards. It managed to move above the 50 period moving average. So you see, it broke my triangle. So yeah, 79.30 and 80 territory are the next resistance areas for oil, because apparently we have some positive intraday bias in oil right now, today in general. So this is something that started in the 2 hours ago. Yeah, so so that I'm not sure whether you're following the accusations that in regards to sabotage of Russians gas pipelines to Europe. There were some serious leaks, and that Denmark, Germany, and Poland accused Russia that it was responsible for these leaks on Nord Stream 1 and Nord Stream 2. And this is something that um, uh, uh, put the European gas higher today, and we have seen that oil also found some footing and edge higher. So yeah, already broken, already breached yesterday's peak. So the next resistance area is at 80.12 territory. So Monday's peak. If that breaks, the next top, the next ceiling is at 200 hourly moving average team. Okay, we've seen some RSI is at 64 and rising. So there is the intraday outlook for oil is positive. Turn positive. Okay, that's why you were asking for it. Okay, sorry, I missed your comments. I cannot tell you what to do, Alim. I cannot say you can sell or you can buy. Just helping you to technically and fundamentally analyze the market is upon your discretion. And do your homework. If you want to take action, find your targets, find your stop losses, put your stop losses, do your risk management and money management, okay? Yeah. So fast moving average align higher, broken my triangle. MACD in the 1 hour chart turned positive, even though signal is still negative. RSI is still pointing upwards. Stochastic also upwards. It hasn't really turned down yet. It hasn't really pointed to a reversal yet. So there is some positive bias intraday. Alain, I cannot tell you what to do. I'm sorry. So what is else going on? I think that's pretty much it. If there's anything else, guys, that you want me to cover, anything else that you want me to check? Anything? No? Okay, otherwise I'm gonna call it a date. Let me double check. No questions in Facebook or YouTube. No further questions in GoToWebinar. So we're good to go. So, guys, this week we don't have a really high impact data, okay, coming out, but we have a lot of speeches from central bankers. We had Bank of England announcement this morning. We have Powell later on. We had Lagarde this morning. We have Bauman, Elderson. Tomorrow we have Guido, Panetta. We have Lane. So the central banks remains in the spotlight, remains into attention, and also all these headlines, all this news about the geopolitics also affected the market. So keep an eye on the news, on what's going on around us. Okay. So that was for me. Thank you. Hopefully you enjoy it. If anything you need, we are here to help anyway. So don't hesitate to contact us. Thank you very much. Have a great day ahead and see you again tomorrow. Bye bye.